Hello guys, welcome back. We just had the release of the RBA meeting minutes. Okay, so lots of things to talk. Actually, I will be diving more deeper into the webinar, okay, because I don't have much time here. It's just a limited 5 to 10 minutes time. I don't want to be having like 1 hour video for everyone. I could, but this is why we have the webinars and for you to learn more in-depth content as well. So come along tonight, well, this afternoon, 4 to 5 p.m. in Sydney time. For you to join is easy. You don't need to pay anything, it's completely free. You just need to go to the description of this video and click into the Telegram link. Soon it hits 4 p.m, I will send the link, the Zoom link into the Telegram so you can join from the Telegram and you're ready to go. Okay, so we just got the release from the RBA and the RBA meeting minutes. And why is it so important, first of all? Well, first thing is, I've explained on yesterday's videos that everything that is being saying inside of the boarding room, it's been noted down, it's been typed down, okay? And that's why it's so important, because sometimes the press conference or the rate statement, it doesn't give us what they actually thinking, what they were thinking on that time when they took the decision of cutting 25 basis points. So if Josh say that Josh thinks the rate should be higher for another 3 months, that's already very hawkish, because there is one person inside the meeting, the boardroom, that is actually discussing and trying to convince the others to maintain the rates higher for longer. And that's why it's so important, because these nuances we can't catch into the rate statement or on the press conference, okay? Because usually the rate statement and the press conference, it's used to deliver the opinion that they have on the geopolitical, on the inflation, household expense, electricity prices, inflation, etc. Okay, so all around is designed to give us an overview and not an in-depth view, and that's exactly what the meeting minutes give us. Okay, so that's why it matters so much. Having a look at what they've said, and I have a few noted points here so I don't forget anything. I've noted down 3 main points. So the first point is they're still very data dependent. They're flexible, okay? So flexible meaning that they could have more cuts, as they could have no cuts, as they could have maybe hikes. So there are the 3 actual decisions in table, let's say, okay? But there are a preference, and the preference is incremental move over aggressive actions, okay? So that means that cuts is an aggressive action at the moment for the economy, and they know that, okay? So the second point is that the emphasis on the global headwind shows a continued vigilance towards trade tensions and the potential transmission to the local economy. So for those who know, Australia and China, they're very friendly and they have a lot of partnerships together. And, you know, majority of the time when Chinese yuan is rising, Australian dollar is rising as well. As of when US dollar is rising, Australian dollar is declining. Okay, so it just shows how distinct those economies are and how close China and Australia is. So for this reason, if the trade tension continues to go further for longer, this can most likely affect into Australia. It had already a little bite, you know, but nothing too huge, but still have a little bite into what has been going on into the whole world, into the whole economy. So they are still very cautious about that can affect us, okay? And if that affects us, what we're gonna do? Because prices will go up, you know. So all of these little things, they are still having a look. And the most important, and the last point, is that the future cuts are likely, especially if inflation remains contained and international uncertainty deepens. So if the global trade, if the tariffs, if the, you know, the whole thing around the globe starts to fade out and there's a little bit of more calmness, let's say, and, you know, the inflation in Australia starts to lower further, more cuts are likely. Okay, so this is very, very bearish to the Australian dollar. Okay, because they are expecting more cuts, and that means that the rates will be lower. And there are places around the world, let's say UK for instance, or even US, there are higher rates, higher yielding. Okay, Japan for instance, there are higher yielding. So therefore, they're moving towards the money is moving towards those areas and outflowing from Australia. So Australian dollar may be weakening. Okay, in the short term. Soon as the releases got out, nothing really happened because it's a really big one. So, you know, until people read it, digest and sort of understand what was going on, and okay, that's bearish for the Australian dollar. Majority of the currencies with the AUD into the quote have been going up. So, you know, like Euro Aussie, Pound Aussie, what else? Aussie Australian dollar, Aussie yen, sorry, and a few others, they have been shown some sort of weakness into the Australian dollar, okay? So I have a bunch more to talk about, but that's what it is, you know, the most important. So if you want to come along this afternoon, 4 to 5 p.m. will be really, really important for you if you want to trade the Australian dollar, if you want to have continuous understanding of what is happening around Australian market. It's really, really important that you come this afternoon. It will be 4 to 5 p.m. on Sydney time, and I'll wait you there. Don't forget to subscribe to the channel and give us a thumbs up. And if you can, please share this content with your friends. It helps us a lot to grow this community. And it sort of give us more happiness to come here every day and post good quality videos for everyone. Guys, thank you so much. I see you in a second. So see you in a few hours, or I see you in the next video. Bye bye.